Hello and welcome to the Trading with Ashley show. I hope you're all having a wonderful Sunday. We have a really busy week ahead. We have some economic events that could shape the market, and I want to go over a few earnings with you that are going to be happening. But best of all, I have a great trade for those of you that are interested in a sold put or if you're interested in a credit spread. Speaking of credit spread, remember we have the new Trader Network Credit Spread Challenge starting tomorrow, and I have something really exciting to share with you about that. All of you are going to learn an incredible way to trade credit spreads safely. And because I am so confident in how I will be teaching you this, I am doing something that I've never done before. If you join my community, the New Trader Network, at the $100 a month rate before I call that first trade tomorrow, and you take part in this 6-week challenge, if through my own open and closed trades during the challenge, I am unable to generate at least double the cost of your admission for September, which would be around $200 in premium collected and finalized, I will refund your September payment. That's how confident I am in the trades that I will be offering you during this challenge. That means that for anyone already in the community or for those that sign up between tonight and tomorrow before I call that first trade, this is a completely risk-free challenge for you. Use the special link below to be a part of all of the fun. Now, let's jump into the computer so that I can go over all the economic events this week and then stay to the end because I have a free trade for all of you. You can either do a sold put or a credit spread on a very popular stock. I can't wait to share that trade with you. Looking at this week, Monday's kind of muted. We have consumer credit. Tuesday, we have NFIB optimism, not a huge impact on the market. Now, Wednesday, we have PPI, Producer Price Index. It's interesting because we do have CPI on Thursday. Typically, CPI comes before PPI. Now, PPI does have an effect on the market, but it won't be as much as what we see on Thursday, September 11th. That is CPI. All eyes will be on this number on Thursday. So if you have a trade that extends beyond Thursday, then you may want to consider getting out early if you're not certain on how it will turn out. And then on Friday, we have consumer sentiment. Now let's look at the earnings this week. And when it comes to earnings this week, there's not a whole lot to discuss for earnings, but I am going to be watching Oracle on Tuesday. Then we've got Chewy on Wednesday before the market open, and then we have Adobe on Thursday after close. This week's trade, I am going to focus on Amazon. Now, Amazon hasn't caught the bug like all of the other Mag 7 stocks have, where it just wants to have its day in the sun. But I do think it's coming. So let's take a look at everything Amazon. Before we get too deep into the technicals, let's take a look at the analysis tab and make sure that this is a profitable company that we want to trade. So here we are. Look, the earnings has been very strong. That's good. They continue to have great revenue, and then they are definitely profitable. This profitability should definitely increase as they take a better advantage of AI and all it has to offer. Their current price target is $263. We're trading under that right now at $232. Current P ratio, very respectable at 35. Now, looking at the technicals on Amazon, it is trading on the 3-month chart. It is trading towards the top of its Bollinger Band, but the RSI is only at 56, so there is room to run. So this stock could catch wind here soon, and that would be encouraging if it continues to push up because it can stretch these bands. But let's look at some key levels if we want to either sell puts or maybe do some credit spreads. I like looking at the middle of the band when we're over 50 on the RSI, and that's sitting right here at 227. So I'm going to consider something maybe around 225 for a decent entry if I want to sell a put. If I want to do a credit spread, I want to be more conservative with credit spreads. And those that are going to be joining me in my challenge, they're going to see how I utilize different technical aspects of a stock to try to make my trades safer. But looking for credit spreads, you see here this 200-day moving average is right around 213. So I will more than likely look at something that goes right here or below it slightly so that we can use this as a level of support if we do a credit spread. Now let me take you into the option chain and let's look for some opportunities this week with Amazon. As I have been showing most of you, when I am trading over the volatile months of September and October, I like to go a little bit further out. You can always get out of these trades early, but going further out gives you more premium and it gives you a little bit more protection from wild price swings. So for this, I'm going to go out to December. Now, I liked that one area we were looking at the 225 level. And look, this is a really good premium. If I go with a 225 strike, if I sell that, the delta is respectable. It's at 0.35. If I want assignment, this is not a bad delta to go for. And I would like assignment of Amazon because I'm at the point where I actually want to buy more shares right now. So if I were to sell this put, I'd have to put up $22,500 if I was using cash. Usually a lot less is required if you're using margin. But for that, I'm going to get about $10 a share. So this will be about $1,000 in premium on this trade. Now, if we see that Amazon does take off in the coming weeks, then this $10 that I received, it'll shrink down to $5 really quickly at that point. That would be the point that I would take an exit on the trade because that would free up my $22,500 in cash and I could use that for other trades. So I look at this as a strong possible setup and I will be taking this trade on Monday. Now, for those that are interested in doing a credit spread, if you have a smaller account, let's look at a potential trade setup. Still working with that December date, but this time I am going to look at the 210 strike because remember the 200-day moving average was at 212 and I want to try to insulate my trade even further. So for this, I am going to sell the 210 put and I am going to go down to the $200 level and I am going to be buying the 200 put. So there is a $10 difference between 210 and 200. So that's a $10 wide spread. This will require $1,000 if I'm going to put on this trade. When I send it to a ticket, let me show you what it looks like. Here's the trade setup. So the dates are the same, 12/19. On the 210 put, this one I am doing sell to open one contract. On the $200 put, I am doing buy to open one contract. My net credit will be around $1.90 per share, so it's $190. And here's what the setup is. I'll be receiving $190 for this trade, and the reason you don't see $1,000 here is because it's discounting your potential risk by $190 due to the fact that you will receive that, and it's reducing your risk on this trade. So the risk is $810, and the reward is $190. Now, if you put this trade on, you can decide when to exit, but I like to usually exit at about a 50% profit on the trade. Now, if this trade works against me, then I would look to exit once I see 100% loss. So if I received $190 for the trade, if this $190 then jumps up to $380, that'd be 100% loss, and at that point, I would exit. So I hope this gives you a potential trade setup if you're interested in trading Amazon this week. For those of you that are going to be a part of my challenge, I will see you. I'll have a lot more trade setups for you in the coming weeks. I hope that inspired you, and I hope I see even more of you tomorrow for the kickoff of the challenge. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, if you want to watch how I was able to generate enough income for free Robinhood leads, that was such a cool trade, and you can learn from this. I'm going to leave that video for you right here.